Welcome back to Primary Source China Investment. This week, Peng Guo and I are here with show K5, and we're talking about the renminbi and globalization. We've talked about this in the past, and there's been a lot of press about China using the renminbi more for trade and maybe with Russia. So let's go and look at a little bit of the data, because I'm of the opinion that renminbi internationalization is going nowhere, and it hasn't been going anywhere for a decade. And I have some data to back it up. So first, the reason renminbi is not taking off is currency convertibility. There are still far too many programs and quotas set up for money to flow freely in and out of the mainland. So this makes the currency very difficult or unattractive for investors to hold long term. Similarly, if investors are not willing to hold your bonds, you are not a serious currency. Foreign ownership of renminbi-denominated bonds is 3%. And this tracks with the 3% with the secondary reason, which is trade. So let's talk about the first one, Peng Guo. I'm saying currency convertibility is still an issue for China despite all of these programs. What's your thoughts?
I think if you try to move the money in and out of China, that's definitely is not convenient. So currency convertibility is need to get approval, but you have a good reason, you can apply and try to get approved for that. So that's possible, but it still be more challenging if currency reserve get reduced. But from China perspective, most people believe this is probably best way to protect China from the volatility of the international market. Even like in current situation, if the money flow out of China, it still cause the all the financial market get depressed.
Correct. So if China doesn't, said another way, if China doesn't have these gates, capital is going to flow out of China, and it's going to convert to some other currency, not renminbi.
That's true.
That's the first reason that the renminbi is not taking off and it's not going international. The second reason is trade. And while we've talked about it a lot, China is the world's most prolific trading nation and counts more than 120 countries as its largest trading partner. The world is not settling this trade in renminbi. And in fact, the world is trading more in US dollar. If you look at the SWIFT payments, sure, China has increased recently. Most recently, July 2023 is 3.06. But if you look at the top line, US dollar is actually growing faster. So more trade is happening in US dollar. And just in case people are thinking I have a recency bias, if we pull this chart out, I pulled 2014, 2016 timeframe, renminbi has increased. In 2016, it was 1.72% of SWIFT payments. But US dollar was 40%. So US dollar has hovered around 40% for at least a decade. And there's been a lot of discussion about the ruble, because Russia has been sanctioned out of SWIFT. But the ruble hasn't been a serious currency since 2014, when it was 40 bips of SWIFT payments. So the ruble is not a highly used currency either. So these charts look a little bit like the biggest beers and all of the craft beers, right? The biggest beers are the US dollar and the euro, and everybody else is fighting for table scraps, because what are we doing here? 70% of all trade is in US dollar and euro. And the other point about this trade is most of China's trade is self-dealing, with 75% of the renminbi transactions going through Hong Kong.
I have researched the currency index before. In China, forex market, US dollar probably take more than 90%. It's really dominant in China's currency trading market. But the problem is all the US problem, they will reflect to the China market. Think about but as a American, they never think of the dollar problem or conversion problem. But for other country during the trade, they have a huge risk and a huge loss. That's why they really encourage you use their own currency and try to minimize really do whatever they can to minimize the dollar impact and the risk. still significantly get impacted by the Federal Reserve, the policy raising the interest. So that's bring a lot of risk in their own market as well as the international trade.
That's a great point, Peng Guo. That brings us to our third reason, which is political risk. And this is really the risk of an exogenous event, something like depreciating the currency or seizing assets. In the past, some of this was insurable, but the costs have skyrocketed, leaving only the most desperate to consider greater usage of renminbi. See Argentina and Russia. Insurance companies that used to do this, there used to be 60 insurance companies providing political risk. Now there are basically 4. And this is a bit of an own goal, as countries with significant bilateral trade would face less currency risk simply using renminbi instead of pricing in dollars, yen, or euro. So getting all of these new BRICS, which has dominated the headlines because of that big meeting in South Africa, to use more renminbi is a strategy, but perhaps only the most desperate are willing to sell their commodities and debt to oblige. So as we sit here right now, there are 3 massive problems for greater use of renminbi. And if I move back the calendar a decade or even a decade and a half, I have to take some responsibility. I was the one saying that renminbi internationalization was here. I was part of a team that launched an offshore renminbi product, the first of its kind. So I really believe that renminbi was going to be a bigger tool and bigger use given its trading status. But China has already been the biggest trader on the planet for more than a decade, and it hasn't really changed.
That's really like the market behavior. So people go together and trying to find a different way, like the use of renminbi or whatever way to minimize the dollar risk. Because the dollar, the inflation, higher interest, the liquidity, and bring huge risk. We already know that probably many countries suffer that for many years. I believe as the rational selection, more and more people and country definitely can increase the usage of the renminbi, but doesn't that mean they will abandon the dollar? They really try to supplement their international trade and try to get more balanced in their own environment.
I think that's a great point. So thanks for tuning in for show K5, and we'll see you next week.
Thank you.